Hey, good morning to everybody. Happy Thursday. Time for Trader Talk in today's market. My name is Brent Moores. Good to see some familiar faces in the chat here. Glad you're here. And any newbies out there, we're glad that you're here. Any first timers, make sure you type in the chat, say hello. We have a good community here, and we just want to give you a welcome. And if you're watching on a recording, hey, that's great too. We're glad to have you. I'm joined by Barb Armstrong, who's helping me out in the chat. Barb I've been working with Barb for many years now, and I appreciate her. I've learned a lot from her over the years, and she's a wonderful instructor. So make sure you check out some of her classes, including a trading a smaller account class, which I think a lot of people like there. So make sure you check that out. You can follow either of us on X at Brent Moores CS, at Barb Armstrong CS, for additional financial content throughout your week. Barb's job is to help me out in the chat. I try and get to the questions I can, but it can be kind of tough to manage those sometimes. So Barb helps me out with that. Now, before we get too far into this, though, let me just mention a few things. The information today is for general informational purposes only. It's not an individual recommendation or personalized investment advice. And specific securities, we're going to look at specific individual ticker symbols here today. These are not recommendations. The paper money software application is provided for educational purposes only. It is, but paper money results and real results can be different. And one difference between paper money and your a real actual account is short options, for example, can be assigned early. In a live account, they're not assigned ever early in the paper money account. The paper money software application is for educational purposes only. Schwab does not recommend the use of technical analysis as the sole means of investment research. Past performance is no guarantee of future results. All investing involves risk, including the potential loss of principal. There we go. Let's head on over to the market. So what do we do here in this session? Well, we look at what's going on in the markets, trying to get you prepared for the trading day here. This is the S&P 500, and we're off to a tepid start. Basically, we're not moving much in the first couple minutes of the trading day. We can look at that in just one sec here. We'll look at the intraday on this in just a sec, but you can see the general trend on the S&P 500. Let me do this though. Look at the SPX and look at the NASDAQ. Okay, that's the SPX. Here's the NASDAQ. Here's the SP. This is like an eye. You go to the optometrist. Here's the eye chart. NASDAQ. You see, they look pretty similar, don't they? They're very similar. Now, if you're trying to distinguish between them, one thing you could do is you could say, well, look, I want to look at, let's put this in terms of percentages. Here's the NASDAQ year to date. So this is just year to date, up almost 22%. SPX year to date, up, we'll say almost 16%. So there is a difference between those two. Even though they look pretty much the same on this chart, when I go SPX to NASDAQ, I'll go back to SPX here. I won't keep switching on you, but they look very similar, except the NASDAQ tends to be a little more exaggerated in the movement there. Some of those bigger NASDAQ stocks tend to just move more, plain and simple. And they have higher betas is another way we say that. And it's not always a good thing. Of course, moving more is good when the market's going up, and we're all happy with that. But when the market goes down, moving more means a bigger potential loss on that too. So there you go. Now, what I would say on this, though, as we're looking at this, and by the way, that's a 20 and 50-day moving average on the chart. Here's the 50-day. We're well above the 50-day. We kind of tested it back here, but we're well above that 50-day. So if you're looking at this SPX and going, what percentage of stocks in the S&P 500 would you say are probably above the 50-day moving average? You'd probably say most. I mean, that would be my initial instinct looking at that. But look at this. Let's do the SPX equal weight, where we're not excessively, I don't know if that's the right word, that sounds almost pejorative, weighing the big chart, the big caps. Here's the S&P 500 equal weight, where every company gets equal representation. You get a true democracy here in that S&P 500 equal weight. We're actually below that 50-day moving average. And so, in fact, you can see this. What percentage of stocks? This is the percentage of stock companies in the S&P 500 that are above their 50-day moving average, about 43%. Okay? About 43% of those. So it's not equally distributed. But let's look at this. We have the trend up. And what's happening with the trend? It goes up, and then it kind of pulls back, kind of flags is how we'd call it in trading lingo. It goes up, flags, goes up, flags. What's the next step? I don't know is the answer. It looks, if the past repeats itself, okay, if the past repeats itself, we probably, technicians would expect a flag here on this because the trend hasn't been broken. We're still above that 20-day. We could still draw a old resistance here, which would be new support right there. And the expectation of a lot of technical traders would be that it's going to bounce up from here. But you know what? Trends break. Eventually, they break down. Even if that looks like that's what's going to happen, we don't know what's going to happen. Okay, so that's the S&P 500. I'm not going to do the same thing on the NASDAQ because it's going to look the exact same here in my mind on that. Where it probably is going to look a little different is when we start to look at small caps. Oh, actually, before I go to that, let's look intraday and just kind of see how we're doing intraday here. Here's a 1-day, 1-minute chart. I'm just going to zoom in so that we can see it a little better here. Here's where we started. In fact, let me throw on some pivot points on this. Okay, so here's some pivot points. Again, let me zoom in a little bit. So the area before this kind of gray area would represent yesterday's kind of main session. This is kind of extended hours, this kind of grayish area. And then here we go. We open up and we're right below that pivot point. We're right, and so, you can see that this is a 1-day, 1-minute chart. So this is a 20-minute moving average. This is a 50-minute moving average. If we're looking for potential resistance, well, intraday, and not everybody needs to use an intraday chart. This is a little bit granular, I guess, for a lot of traders. But if you are using this, you could look at this and go, well, this is maybe a key level. If we break through this, maybe that would be, maybe some more clear sailing, so to speak, going up to maybe this is what we consider to be the R1 level using a pivot point. Okay, resistance 1 level right there. So we'll see where it goes. Or if we go down, potential support there. So that's how we do that. Now let me go back to our normal chart that we were looking at, and let's take a look at that Russell 2000. So these are small caps. A little bit different on small caps, a little bit more weakness on small caps. Again, kind of opening up, kind of mid-level here, down just a smidge here on this at this point. It looks like we're bouncing though on that, but the performance definitely has lagged on small caps, and that can be related, maybe a little bit more interest rate related there. Interest rates have a little bit more economic concern, perhaps. Here's interest rates. Let me just, do I have that quick linked? I don't. So let me go up here. TNX, CGI. Okay, here's the 10-year. Small caps tend to do better in a lower interest rate environment. This is what the interest rates have been doing. The 10-year, they've been going down. That tends to benefit them. Of late, though, interest rates have kind of popped up, haven't they? Okay, they're now above that 50-day moving average. Maybe a little bit of a bearish harami right there if you look at it right here. And But you can see some strength in that interest rate there. And so that may be wearing on the most recent performance, at least on that Russell 2000. Let's go back to that Russell 2000 with that in mind. Here's RUT, and you can see the general trend has been going up. A little bit more weakness lately. Now, I don't want to deceive you and imply that there is a one-to-one correlation between what the 10-year note is doing and the Russell, okay? Or a perfect inverse correlation. There's certainly correlations there, but it's not perfect, and you'll see exceptions to that rule. Okay, now, this is the 10-year note. I want to venture into bonds just for 1 sec. We're not talking about trading bonds here, and I'm going to actually do a bond future. We're not talking about trading bond futures here, but I just want to point out something to you. This is the interest rate. Look at the chart. Now, look at I know I have it. Don't I have it? I have it. Maybe I don't have it. Okay, I'm going to type it in. Okay, this is what the bond price is doing. ZN. You see that? It's maybe a little bit harder to see the way I did it, but they're basically opposite one another. Look at the 20-day and the 50-day. This is the price of bonds. This is the resulting interest rate. They're just basically opposite on that. So they do go opposite directions, price. And so when you ask, like, why does inflation affect interest rates? Well, you can think it through. If inflation is kicking in, are people willing to buy fixed income investment? No, you kind of don't want to tie your money up in a lower interest rate fixed income investment, i.e. treasuries, if you expect increasing inflation. So therefore, people buy fewer treasuries. It deflates the price of treasuries. And remember, the price of treasuries and the interest rate go opposite, so it drives the interest rate up. And that's why when we talk about interest rates and we say, what's the correlation between inflation and interest rates? We'd say, well, generally higher inflation expectations would imply higher yields on that. Okay, so let's take a look. Now I'm going to take a look at the chat, and one thing in the chat, there's a survey link. We appreciate your feedback there. Now I don't want to belabor too many points here, but Kelly in the chat says the pure growth, the growth aspect of the S&P 500 down about 0.5% today. That's this. This is just growth stocks, the most growthy of the growth stocks here in the S&P 500. What about the value component? Up about 0.5% today. Do you see that? Do you see the difference there? Do you see today? I'm just talking about today. There's more of a shift more towards value type stocks on that. So I appreciate you bringing that up there, Kelly, on there. Okay, let's move forward. Let's take a look at the VIX. Now, here's the VIX. So how concerned are people in the market? Well, moderate concern, I guess. This is a kind of fear gauge, so to speak. Our VIX is a little bit above 18, which is a fairly high level. It's not an extreme level. This is more of an extreme level that we saw. A few days ago, we kind of hit a mini peak. But, if you look at this, it tends to go up and then come down. Goes up. It's not trending. It's not trending. It's not like markets, which often are trending. This doesn't tend to trend. It tends to revert back to kind of these lower levels here. Now, when that's going to revert, or if that ever is going to revert, I don't know for sure, but that's just the way the VIX goes. And so this can certainly impact, it can give stock traders an idea of how, kind of anxiety levels in the market, I guess. It can give option traders an idea for option strategies, types of strategies that they want to use. But I'm not going to do that. No, I'm not going to get into options right now. But anxiety in the market, well, yeah, maybe. We're on day 37 of the government shutdown. I think the market really has taken it mostly in stride. But, at some point, that could certainly wear on the markets there. The Supreme Court is hearing about, judging on the constitutionality or legality of the tariffs. And so there's uncertainty in regard to that. And, we'll see. I don't know. There's going to be different things that drive the market. Concerns maybe about market valuations here. But let's just talk just a little bit about valuations, because like when we look at the market, there's some things that often we'll look at, say, the SOX index. This is semiconductors. Real strong on semiconductors. Semiconductors have kind of led the market. They've kind of led the market up, and they could certainly lead the market down. They had a little tumble here a couple days ago, but we've recovered pretty well. We've had a bounce. If I were looking at this, I'd say this seems like old resistance, possible new support. We came pretty close to that, came to the 20-day moving average, and we got a nice support bounce. When you think of semiconductor industry, you can think of like NVIDIA, AMD, and, others, Micron, Applied Materials, things like those. Those are all going to be in that semiconductor index. But this is a nice kind of standard flag pattern right now. And that's what we're seeing. Doesn't mean every semiconductor. So there's the flag. Some traders would consider maybe, if they're a technical trader, they're looking for they may enter on a breakout right there. Okay, that could be. Or some maybe have already entered. Or some will say, hey, it's not an appropriate time to enter. It could be valuation driven. By the way, if you're looking at individual companies and you're going, well, what's the, we'll pull up NVIDIA here for a second. Here's NVIDIA. And regarding NVIDIA, just getting news out there on this, their CEO, Jensen Huang, reportedly told the Financial Times yesterday that China is going to win the AI race. Okay. Now, he later softened his statements on that. I think maybe he realized that maybe that he didn't say that how he wanted to say it, perhaps. I don't know. I can't speculate on that. But he did say, and this is a quote, "As I have long said, China is nanoseconds behind America in AI. It's vital that America wins by racing ahead and winning developers worldwide." Okay, so that's Jensen Huang, CEO of NVIDIA. But if you're looking at, and then of course we have earnings before too long on NVIDIA coming out. But if you're looking at these, you can always go to the Analyze tab, go to NVIDIA, go to Fundamentals. And if you scroll down in the fund, let me make that a little more efficient. We're going to scroll down a little bit more. We can go to and see PE ratio around 50. Well, that's not necessarily a warning sign. I mean, that's high compared to most companies, but they're also growing more than most companies. And so there's certainly maybe, well, let's do AMD. How about? Okay, that's a company that we've seen lately. AMD PE ratio about 86. You see why some people have some valuation concerns. Now, this isn't going to be nearly as significant as like Palantir, PLTR. Okay, valid point, Trevor, in the chat there. Let's go to PE ratio on Palantir, 422. So when you see a company like that, it probably wouldn't be surprising to see bigger moves when it does move. So, when you think about PE ratios, it's just part of the equation. You can't just look at a PE ratio and say whether something is too expensive or not, because a big factor in that is the growth rate of the company. Let's look at some other aspects of the market here. And then I'll go to I want to look at maybe some companies that had earnings. Let's look at gold. How about? Again, we're not trading this. This is a future, but we're not trading it. We're just looking at the price of gold here. Gold's taken a pretty good drop. I mean, it dropped almost 10%, not quite, but almost 10% from its high. But at this point, people were going, wow, gold was kind of going crazy. This seems like a significant level right now, because we came down to it and bounced, came down to it and bounced. That's how we define kind of support levels near the 50-day, but that 50-day is going up. So in a couple days, assuming we don't get a huge difference in gold price, this 50-day will be moving closer to where that is. This would seem like a reasonable technical level to look at on gold there, okay? Well, I don't know. We'll leave it at that. Let's go to silver. Kind of the same thing, a little different, but again, if I were to call out a support level, I would probably say that is about a significant support level on silver. 50-day moving average, kind of similar to gold in that regard. And of course, that's not every metal. Here's copper. Here's copper. Probably call that a support level, but not the run up on copper. Copper's more of an industrial metal, not a precious metal per se. But you can see, hey, we have had some strength over the past few months on that as well. And you may be able to even see that in materials. The materials sector has been relatively strong there. Now, of course, there's other commodities that we may look at. Oil. Well, there's been kind of a concern with oil prices. Concern? I mean, it's good for you and me in a sense if you're filling up, you have a gas power car to see oil lower. It's good for people shipping stuff. Businesses shipping rates are cheaper if crude oil is lower price. Good for airlines. Now, I don't want to imply the price of crude is necessarily the price of refined gasoline. There is the refining process. There is a difference there. But this is positive for the inflation picture, but it can be those people who are, want the oil to be more expensive, then the concern is there's kind of this supply glut right now. A lot of excess oil out there. And you can see, look, we're right around $60 a barrel, man. That's pretty cheap. Technically, how would I look at this? Technically, what I would say is this. I'd say this is, forgive my somewhat crooked line here, this is the trend we're in right now, that yellow line right now. Okay? Trends can be broken. Look, I drew a trend in the past here. Well, it broke out. But it's kind of resumed its general trend down there. And so there we go. Question from Trevor. Why do I think it's so low given the geopolitical stuff? Yeah, I mean, geopolitical uncertainty will tend to elevate the price of crude oil, no doubt. But I think in the grand scheme of things, at this point, I'm not sure that the oil markets are pricing in that much risk in the Russia-Ukraine challenge. In the Middle East, well, the Middle East is I'm not sure it's any worse than it's been, I guess, it's, I'm not an expert in this field or anything, but it's clear, it's just not pricing in that much excess risk right now there. Now, let's go and what about others? I mean, those are kind of major areas where people look at in the market. What about this one? Again, we're not trading the future. We're not trading crypto here. Just remember, digital currencies such as Bitcoin are highly volatile and not backed by any central bank or government. Digital currencies lack many of the regulations and consumer protections that legal tender currencies and regulated securities have. But we're not talking about trading this. Okay, we're just looking at the level. Bitcoin's come off quite a bit, right? We're just a little bit above the 100,000 level, which is probably kind of a key level. I mean, that's a nice round. I mean, you don't get much more of a round number than that, I guess, in the sense of how traders look at the market. We bounced off that, but lately, trend has been going down below the 20-day moving average and whatnot. So that's we were up at 127, so roughly a 25% or so drop in the price of Bitcoin there. Let's move forward. Let's talk about upgrades, downgrades. Let's talk about earnings. Pre-market this morning. Let's see how some earnings came out. Here's ConocoPhillips. Earnings came out this morning. Right now, it's not really, that's not a big earnings move here on ConocoPhillips. So if you want the numbers, by the way, on, I can see this, and, sometimes you can kind of hover over this and you can see 140 estimate versus 160 actual. So it's a beat on the bottom line, but if you want more info, you can go to, there's a gadget, Live News. If you don't know how to add a gadget, go down the little plus sign down here and you add a gadget. And one of the gadgets is Live News. Take that Live News and link it. Pick your favorite color or favorite number or whatever, and link it to the chart. And then when you bring up the chart, it automatically is going to bring up the news. You can say press release and click on it. It brings up a window. Popped up in a different monitor for me, but I bring it over and I can read more about this if I want there. And so you can do this for this. Again, it came up on a different window and you can read more if you want to get on those. Okay. So, but bottom line, ConocoPhillips had earnings this morning, not making much of a move right now. There's another one that had earnings this morning, Datadog. Okay. How's it doing? Pretty good, I'd say. They're up 21% this morning. Okay. So for a trader, let's say you're a trader and you're looking to trade this. Well, if you go down and say, well, what would a technician consider? They'd probably say, this is a gap. Okay, fair enough. We got a gap. And they'd likely be looking for this to hold as support. So if this starts to come back down, look for a bounce there. And some traders would say, once that kind of establishes the bounce there, that would be a very positive sign on that. And this is kind of an island. Okay, right there. That's kind of an island if we kind of get the bounce there. But sometimes when the stock moves a lot, you see extreme move up and then extreme move down as well. So the key is holding the gap there on that. Okay, let's move forward. Let's go. Those were a couple that came out this morning. There were a couple that came out yesterday, including a big name, Qualcomm. Okay, Qualcomm came out after market close yesterday. That little tag is not sticking for me there, but not a huge move on this. So it's mixed, I guess, on that. Not a big move. Another one came out with earnings yesterday. DoorDash last night came out after hours. Came out. How'd they fare? Not so good. Down about 15% this morning. So and it was preceded by a downward trend. So this is a pretty bearish pattern, I think, is how most technicians would consider this. Coming out today later, we have a few companies. After market close today, we have Affirm coming out with earnings. Trend is going down right now. Airbnb coming out with earnings after market close today. Expedia, so between Airbnb and Expedia, kind of that travel industry sector, coming out with earnings after today. And Wynn result, these are, this isn't a comprehensive list, but these are some of the bigger names I picked out here, coming out with earnings later today. Wynn Resorts. Okay, now let's talk about some companies that have been upgrades and downgrades, and maybe price changes. But when I talk about price changes, Qualcomm, which we said came out with earnings yesterday, and we said, well, the move wasn't that much. I did have a price target change, and Bernstein raised the firm's price target on Qualcomm to $215 from $185. Clearly, they liked what came out in on earnings. They're keeping the outperform rating on its shares. Bank of America raised the firm's price target on Qualcomm to $215 from $200. So same price target as Bernstein, keeps a buy rating after what they called a strong quarter there. Mizuno raised the firm's price target to $200 from $185. Okay. Let's go to DoorDash. Okay. This is one that we looked at. Not so great on earnings, and probably not a super shocker here that we have some lowered price targets. Bank of America lowered the price to 305 from 325. Bernstein lowered the price target to 285 from 310. So lower. So there's the earnings, and then there's the interpretation of the earnings. There's the market reaction, then there's the analyst reaction, which can in turn help form the market reaction. When traders and investors see analysts starting to go through this upgrade cycle or downgrade cycle, it tends to affect investor sentiment about a company. So it's not just that they downgraded after earnings, it's that the downgrade can actually further hurt or help the company as well on that. So those are some price targets. Let me just go do a couple more. Here's ARM Holdings, and JP Morgan raised the firm's price target to 180 from 175. That's not like a huge difference. In fact, it was 175 to 180. I'm not even going to worry about that at this point here. And let's do one more here. Lyft, it's a company you guys are familiar with. Competitor to Uber. Barclays raised the firm's price target to $27 from $20. Now that's a significant change there on that. There. Okay. Now, questions that I get often on this. When I'm switching from chart to chart, and um, I'm switching, here's my 20-day, my 10-day EMA, and you can switch and use whatever you want. Let's pull up the SPX again. Okay, here's the S&P 500. Down, I see in the chat some comments. The the S&P 500 well, we opened up about even. We're going down. It's going down. Support level. Remember, we said at the beginning we'd probably call this kind of a support level. So we're kind of right there, and I don't want to be too specific on that line. Think of it as a kind of a big fat line or a wider area. If it goes down a few cents below it, a dollar, a few dollars below it on this price, probably not that significant a thing, but this is an area. And that's, so again, I don't think this changes the overall picture, the broad picture, but it's a narrative for today and the markets, what's happening in the markets today on this. But that's the 2050 day. Let's look at that 10-day EMA because we're bouncing off the 20-day. Here's a quicker. The red here is a 10-day exponential moving average. Exponential moving averages are a little bit more reactive than just a simple moving average. And so this is showing more weakness there. It just kind of depends on, so sometimes I get the comment of like, oh, I want something more reactive. That's fine. And for some traders, that's exactly what you want. But for other traders, the excess, the quicker movements can act as more noise in terms of their trading signals. Because if you're just truly kind of going, well, I'm a trend trader, I don't necessarily want to get out of a trade, or a trader may not want to necessarily get out of a trade just because every time, say, the 10-day exponential turns south on you. Okay? If you're really trying to time it more closely, then the 10-day may make more sense there than the 20-day. You can have them both on the chart. You can put a 20-day and a 10-day on there. Now, I flip back and forth on these. And if you're wondering, how do you get these like little links that you're using, Brent? You bring up the implied volatility, or you bring up something else. How do you do that? Well, you can do these links if you want. It's kind of a two-step process. Well, maybe three-step. I don't know. We'll see. Click on the gear and go to My Tools. You have to go to My Tools, and you can do either on each chart or you can do it as a separate box to the side. That's the first step. Once you do that, there'll be a little gear right here. You got to be a little careful because there's different gears, so it gets confusing. There's a gear, there's a gear, there's a gear. This is the gear we're talking about here on this. Once you click on that gear, then you can link you can add the tags there that you want. You can add studies. This is a study set I added. No, I take it back. This is not a study set. This is a style I added. These are all styles. This is a study that I added, implied volatility. This is just a chart duration that I added here, these right there, and so on. This is a study set I added. Okay, so you can add a bunch there if you want. So if that's helpful, there you go. You can add those quick links, play around with them, find what everybody's going to find something different for what they want. Let's just look at a few other companies here. Let's look at Duolingo, because I saw someone in the chat mention Duolingo. I think it's up the chat a little ways. I don't know exactly where, so I'm not going to recover that. But they had earnings, you can see, and they had a downgrade. KeyBank downgraded Duolingo to sector weight from overweight. They didn't name a price target on that, but clearly not a great day for Duolingo, down 27%. You know Duolingo, that you can learn you can learn a second language or something using Duolingo. And so there you go. That's one that has moved definitely in the market here. Another one, Elf Beauty. Okay, you ever buy cosmetics from Elf Beauty? Rough day, down 32% on Elf Beauty. Okay, that's another one. Another a downgrade. Obviously, we had earnings as well. I think I missed that when I was looking at earnings. But here's Elf Beauty. Piper Sandler analysts downgraded Elf Beauty to neutral from overweight with a price target of $100, down from. So interesting. They downgraded the price target. It was up here. They downgraded it to here, and the stock is down here. Furthermore, when you see a big move on that, look at the candle. Sometimes you'll gap down and it won't continue down. Sometimes it'll gap down and bounce. So you can look throughout the day. Obviously, we just started the trading day about 40 minutes ago. But if you can look right now, we're near the low of the day. That's more bearish. I mean, it's bearish that we're dropping 32% any way you slice it, probably. But if you're down, if your candle is a big candle and we're down near the low, that's extra bearish, we'll say that. If we're near the top of the day, that shows a nice recovery. And for traders looking to trade the next day, it may be a sign that, well, maybe that is a bottom that was going to hold. If we close near the bottom of the day, much less indication that bottom is going to hold there. But we just don't know. All right, everybody. We'll see. Let's. I'm gonna basically wrap it there. Just a quick final check on the markets. S&P 500 down 0.55%. NASDAQ, to my prior point, higher beta. It's almost doubled. The chart looks pretty similar, but just more of it, both to the upside and today to the downside there. So keep that in mind, everybody. Thank you for joining me and Barb today. I appreciate you, Barb. There's a survey link in the chat. We appreciate your feedback in the survey. And tomorrow, we've got another Trader Talk session in the morning. Covers ETFs on Fridays. That one's not recorded. And I think it's going to be James tomorrow on that. And in the meantime, everybody have a wonderful rest of the day. Thank you for joining me. And we'll see you all down the road. Bye-bye, everybody.